everybody? I'm King Wabi. Welcome to another episode of Crypto World Radio. If you're listening to us from YouTube, feel free to like, comment any feedback, click that subscribe button, turn on bell notifications so you can be notified when these spaces go live. Same thing with our Twitter page. If you haven't followed Because Bitcoin, feel free to do so. And you'll be consistently updated with our daily content Monday through Friday. And we have 3 shows: one midday show, one post equities market close, and then myself with the more late night spaces and a bit more crypto specific. And also for you guys, I have the Discord link posted up above. We have over 1,000 members, and there's always some kind of conversation going on, as well as myself and other team members. We're pretty active there. And yeah, today I'm joined by Nakamoto, and it's going to be more of like a formal show, really just me and him. I don't think he's ever really had a space where he gets to properly introduce himself. And Naka's specialty is really extracting some data points, and also he's very good at pinpointing things as far as liquidity comes from. He has certain models that he's come up with from various sources, and to me, truthfully, that's something that's going to be very beneficial heading into this next cycle, which, in my opinion, should be well underway by Q3, Q4 of next year. So, Naka, feel free to introduce yourself, man. I don't think there's ever been a space where it's been more of a formal introduction, man. So, before we get started, feel free to introduce yourself and how you came into the crypto space, man.
Hey, thanks, Wabi. Really appreciate the introduction. So I'm Nakamoto. Obviously, that's not my real name. Um, I mean, I don't want to dox myself, so let me just give a brief introduction of how I got into crypto. It's actually kind of a sad story because I've been friends with this guy called Virgil Griffith, who you guys may have heard of because he got arrested and sent to jail over the whole. He gave like a talk in North Korea. Now, Virgil worked for the Ethereum Foundation, and he tried to get me into Ethereum in 2015. I didn't want to because at the time I didn't have enough money and I was kind of busy, doing like a data science job, doing Python data science, and I didn't actually realize that you could actually buy Ethereum, right? I mean, like he was like, "Oh, there's this cool thing, Naka. You can. It's gonna be like the next phase of the web. Do you want to come and hack on it?" And I was like, "Yeah, well, I'm kind of poor at the moment, so I'm just gonna carry on with my day job. Good luck with it." So this turned out to be probably the worst decision I've ever made in my life. But it is what it is. So a couple of years after that, he got me to go to an Ethereum conference. I think it was in 2018. Uh, I still didn't really kind of realize you could invest in Ethereum. I'd never looked at the chart. I kind of hung out with the people a bit. That got me interested enough to actually make a small investment into Ethereum, a small investment into Bitcoin. Um, I didn't really manage to buy the lows in the COVID crash because I was basically I didn't have any money, right? Like I literally didn't have any money, and like I was like confused that it was all going down so much. Didn't really know much about trading. Then eventually, once we got into 2021, I actually did get into trading a bit. I bought into Dogecoin, made some money on that. I think I bought at 1 cent. Unfortunately, I sold at like 10, which was stupid. um, but yeah, from that point, I was like, look, I should start a crypto Twitter account. I need to learn more about this. It's obviously the most important thing that's happening in the entire world. I'm kind of an idiot for being so late to it, but it is what it is, right? We'll do the best we can. And yeah, that got me in touch with various people. I found Brand in Ukraine. I found the Mark. I found you. I found a whole bunch of cool people. Ethotaku as well. He's another good friend. I also have a couple of guys on a Discord that's still not open to the public. Mostly because I haven't built much on it, which is because I've kind of been sort of sick this year. But I'm actually kind of working on fixing that. So it seems I know what's wrong with me and I know how to fix it. So yeah, I mean, I'm kind of like a late comer to crypto. Although I feel like it's sort of a natural fit for me because of my background in math, data science, game theory, that kind of thing. Um, and I'm also a late comer to trading. I've tried a bit of everything. I think the kind of trading I'm best at is long-term positions. I don't really, I'm bored and not very good at short-term trading. Um, I'm really good at modeling the long term, or at least I think I am. Right? Let's see for the next cycle. Um, but I'm interested in modeling the long term, picking out what's sort of happening from a big picture perspective, and hopefully putting my money in the right place. At least I've done that. I've managed to do that a few times. Unfortunately, I haven't really managed to make it big in crypto because I did arrive at a really awkward time in the cycle, early 2021. Um, I didn't really realize at that point that once you're that late in the cycle, you can't trade on tech anymore. You have to trade where the degens are going. You have to be buying Cardano and Solana and all the fraud and all the scams. So yeah, I mean it's just a typical crypto journey, I guess, except I was probably one cycle later than most people. Um, in terms of learning the ropes, learning how things go, learning that most things in the market are a scam. The market is an unfriendly place where everyone's trying to take your money, and your job is basically to resist all of the different scams, lies, and traps that they're setting for you, and pick the few things that are actually really good deals, and ideally pick them when the market is down a lot. So, I guess that's sort of an introduction to who I am and what I'm about. And yeah, so I mean, what should we talk about today? I mean, are we going to look sort of long term, like where this stuff's going, or where the bottom is, that kind of thing?
Sure, man. Sure. Before we head into that, though, I have been meaning to ask, when you entered the market, were you always looking at various models like stablecoin supply ratio, the USDC printer? Were you looking at things like DeFi Llama or DeFi Pulse to see how much money is going in and out of the system? How did you work your way around throughout the
Yeah.
market?
So when I got started, like my first investment was, in like well, I got in some ETH and BTC. I think at some point in 2019, I can't remember when because I was really not paying much attention to it. But then by like summer 2020, I had my first fundamentals insight, which was, look, that the Federal Reserve have just told us that they're going to print a lot of money. This is going to moon everything, right? I've got to get long crypto. And I tried to persuade my friends. I tried to talk my mother into buying Ethereum at like $200. And she was like, no, Naka, I can't buy Ethereum because, I have these boomer investments that like pay me a dividend. And I'm like, no, but this is going to be the new big thing. You're getting it at a great price. She's like, no, I'm not interested. Okay. Like, I tried, right? But I mean, I guess that was my first, and it's not really a great insight, right? Like everyone kind of, a lot of people had that idea that like, you know, the U.S. Federal Reserve was going to do a bunch of money printing. It already started by then, so you should buy crypto. The problem is I didn't really allocate enough money to crypto, right? So I kind of like had the right idea. I think basically what you should have done then was pretty much net worth in spot and then try and play. I also did some. I also put on some options trades as well with Deribit for Bitcoin and ETH options, and I kind of messed that one up because the ETH options expired in December 2020, just before the big pump, which is actually not a coincidence. The OPEX tends to pin price, but I didn't know that at the time. I didn't realize that I was going to get screwed like that. So I didn't lose money on them, but I didn't make a lot of money, and I should have made a huge amount of money if I'd played that correctly. If I could go back to 2020 with what I know now about how these products work, like I probably would have made it to a million easily. Like it was so easy to become a millionaire in 2020 if you knew what was going to happen and if you knew how to use the products, right? And that's the key. But I mean, it's look, first cycle is for learning, right?
So, so with that being said, Naka, if we can talk about the future now, do you think that opportunity is going to come once the Fed announces that we're in a recession and say BTC goes to 8 to 10,000. And by the way, just for transparency, um, like I do talk to a market maker privately, and he did show me some data points that basically shows that if we break the 2018 yearly open at 13.4, there's a high probability that that's a trap door, and we're going to see 8 to 10K, regardless of like sentiment on CT that everyone's panicking, this, that, and the other. The thing is, just look at Solana today, right? That's going to be Bitcoin at some point in time over the next 2 quarters. So with that being said, Naka, are you looking at kind of that same thing that say like S&P's at 2,800, 2,900, and then Fed is like, all right, we have to start easing again. We broke something. At that point, are you seeing the strongest batch of quantitative easing that the crypto market has ever experienced? Is that what you're looking for the next quote unquote run, and then you just go into something like I know you've been a fan of something that's sort of like a bet on the global, my bad, not global, but market wide liquidity of crypto, like Thor Chain, where it's essentially a 5 to 10x bet on how much liquidity is going to enter um, crypto, like on the DeFi side of things. Is this sort of what you're looking at?
Yeah, I mean, I think if we do get that, Thor chain is probably a good call. I- I'm a little bit hesitant about buying any altcoin right now because alts are still overvalued compared to ETH and BTC, right? So, there's like a phase of the cycle where you want to be. And another thing, actually, I would say that a lot of people perhaps haven't quite got is I think this cycle, from this point on, you need to regard ETH and BTC as a single coin, in the kind of like, ETH plus BTC. Most people who are trying to play it safe, like institutions with big money or just people who don't know much about crypto, which is most people, they're mostly going to go into ETH and BTC, right? So, um, Bitcoin dominance is is probably better to think about ETH plus BTC dominance, and that is definitely going to go up, in my opinion. The combination of ETH and BTC is going to take up more and more of the market. I actually have a. Let me just see if I can pin this to the nest. I have a tweet on this, where I stack these up, and you can see that. And actually, ETH BTC could go down, right? ETH could go down relative to Bitcoin, um, but you could still have the combination of ETH and BTC together go up and the altcoins go down. And the key distinction there is that ETH and BTC are the cryptocurrencies where the insiders don't have any more coins to sell, right? So the Ethereum Foundation, a lot of people on the Bitcoin side will FUD ETH and say, oh, Vitalik's dumping on you. He did dump at the top, but the amount of ETH he dumped at the top was like 1% of the supply or something, or 0.7% or 0.4. It was like some tiny, tiny amount, right? So ETH and BTC are the sort of they're the kind of like commodity like crypto assets where you're not in a dev dump downtrend, basically. But anyway, to answer your question, like, are we going to see Fed QE? I think the answer is probably not, because the Fed has to control inflation, right? Inflation is still very high. Um, they will want to get that under control and hold it there for a long time. And so I don't think they're going to do the mega printing thing again. But they might have to do it a little bit. I mean, they'll do it eventually, but I just don't think they're going to be doing it in 2023. And they might have to do it a little bit if things get really bad, like some kind of event that we can't foresee right now happens. Maybe there's another kind of bio weapon slash plague that's released, and they have to do the printing again just to fix that. I mean, that's possible, right? Or maybe there's like China invades Taiwan. There's like a whole bunch of things that can happen where nobody can see it. It's not a known event, it's an unknown event, it's a quote unquote black swan. So if one of those happens, then yes, but I don't think the Fed will have a plan on the sort of ordinary, mainline course of history to do much printing until, maybe like they will start increasing the money supply probably at the end of 2023, beginning of 2024, right? But it won't be like the printing we got in COVID will probably never happen again, right? And the printing that they start at the end of 2023 will probably just be back onto the trend that we were on before, right? So let me see if I've got this chart actually. I got a chart of M2 that people might find interesting. And basically, what we can see with this is M2, like the broad money supply increased like massively, like drastically, uh, in 2020, and it's actually like rolling over and going back down now. So let me just see if I can post that one. I'll post that under the Ethan BTC one, and you can. I mean, this chart, I haven't really seen this from recently in crypto. This is probably one of the ugliest charts you're ever going to see, and this is the reason why I think people who are buying the dip on Sol, and stuff like that. I mean, they might make some money in the short term, but um, in the long term, or at least in the next say 9 months, this is just going to be a disaster for them, right? If this M2 thing rolls back over, let me just post that into the nest, right?
Yeah,
One.
and in regards to Solana, dude, like I believe the last batch of vested tokens for Solana comes out in December of 2023. Just for the
Right.
individuals that are listening, so there is constant, and I mean constant, um, headwinds for Solana.
Yeah.
So like despite the tech, right? Like despite the tech and the UI and all that stuff, like for myself, dude, I was a huge fan of Terra. Probably like one of the top people that were highly positive on that project. And Naka, I was on record going to your spaces and on Brandon spaces, right around April in March, saying that, oh, if this is going to be a bear market, you're better off buying Luna at single digit instead of Ethereum in the three digits, or BTC in the four digits, or in the low teens, right? But come come
Well, you can,
come and like I
Bobby,
and I
you
was
can,
bare and I
you
was
can, you can fucking buy Lunar in the single digit,
yeah,
like
yeah. and
in
and the
single digit millionths of a cent. It was
and the
available for.
crazy part is that right around like early May, I made a tweet. I'll probably put it in the nest, but I said, I can't wait to buy Luna in the single digits. Well, there's a thing that says be careful what you and, and here I am pretty much
Yeah.
being all in on UST at the moment. And little did I know, certain individuals that were in charge of that protocol for the four pull update on that curve finance
Yeah.
pull. One of the individuals in charge of like LFG or whatever pretty much went on record to say, oh, if you want to exploit us, I'll gladly challenge any billionaire to go ahead and do it. Well, there's a little saying in markets that says don't poke the bear, because when you poke the bear, you summon a whole army of grizzly bears. You know what I mean? And what happened? What happened happened, and protocol worked as intended. But thankfully, I had a good team around me to tell me like the situation about what was going on, and yeah, what happened, and I've I've looked at the market a bit differently since then. And one thing is to never marry a project, even for the long term, because you never know um, what could happen, right? If it's too good to be true, if everything is in place and there's going to be all these updates to make it, the best things in sliced bread, you're better off taking a more conservative approach, rather than becoming obsessed about it. And Naka, I know you've been hosting more of like the obscure side of the crypto market. I know you had a hex space, and
Yeah.
golly, like they put the Lunatics army and the Cardano army from the 2018 bear market and the XRP army to shame. Like these people will literally burn you at the stake and curse at you
Yeah, yeah,
on
yeah, and that's bullish, right? I mean, if you have an altcoin community that has that kind of fanaticism, that's bullish. That's good for the coin, right? You want people who are bullish. The problem, or you want people who are really convicted and who are really sort of fundamentalist about it. The problem is, you want to get into that kind of community early, because if you get into it late, you you just tend up like stuck with the bag holders, right? Um, because there was a pump on XRP. In fact, there were two big pumps on XRP. One in the 2013 run, one in the 2017 run, and then it didn't really pump this time, right? And I mean, XRP is fundamentally a scam, right? Like the way. So here's how XRP works. Um, they have a blockchain in inverted commas that's not decentralized at all. It's just completely centralized. It's useless, and the token is useless. Like you don't, when you have a centralized, quote unquote federated blockchain, you don't need a token for it, right? Because there's why would you have one, right? There's no reason for it. There's a bunch of people with special cryptographic keys who are allowed to do stuff, and no one else is, right? So there's no need for an XRP token. But why did they create a token? Well, because they wanted something to dump on retail, because retail would buy. But then they needed a reason. They needed a way to persuade retail to buy it, even though it was a pretty clear technical case of token not needed. And what they did is they said, oh, look, we're going to ally with the banks, right? Bitcoin is the decentralized crypto, while XRP is going to be like the banks are going to use it. And then they provided some evidence for this, which is that they do actually produce some software that the banks use. The problem is the software they produce has nothing to do with the XRP token. Like two totally different products, right? It's like Apple selling, iPhones, and they also sell fucking printers or something. And they're like doing really well in the printer business, but nobody's buying the iPhones, and they're trying to sell you these iPhones, right? Um, so yeah, I mean, you get coins like this where you know you get a big bag holder army. They're kind of religious about it, and they get spun some kind of story about why it's good, and the story's kind of bullshit, but it doesn't matter because the people who are buying based on this story are sort of too stupid to realize that the story isn't actually true. And in addition, the thing probably pumped a lot in the beginning, so even if they're not really sure on the details of like why it actually works or how it works or anything like that, they're certainly sure that it did pump. But the thing is about trading, like, do you actually have any information advantage? Are you able to predict what's going to pump in the future in a situation where everyone else is already also trying to predict what's going to pump in the future, right? And so if you get in with a bag holder community, it can be very dangerous. So I mean, I'm not invested in Hex at the moment. Um, I'm going to keep an eye on it. I'm going to see what happens. Um, I'll just basically watch it, and I might invest if the things with Pulse Chain look like they're going to go well, because that could be bullish depending on how they execute it. But the whole thing's up in the air. Richard Hart could get arrested. It could be like it could go down like FTT and Sol did. Um, so you have to be careful. I mean, in terms of like where I think you want to be invested right now, I mean, I think you probably want to be holding a decent amount of cash right now. And Brandon underscore Ukraine in the previous space was telling us that you need to know how to get short, and that's true. I do think there's probably still going to be more shorting opportunities in this market. But I actually think most people shouldn't even get short. They should just sit in cash because it's really hard to short, right? Um, if you don't know what you're doing, you're just going to get wrecked. Most people don't have very good risk management. I don't have great risk management. I've got better over time. Um, but I mean, just sitting in cash is a good one. And like I've pinned this M2 chart to the nest, right? And just take a look at that. Look at how much the M2 money supply, the amount of dollars that the Federal Reserve basically creates. Look at how much that just rocketed up in 2020 from 15 trillion to 20 trillion, or 13 trillion to 20 trillion, and it's now actually going to go from 20 trillion probably back down to 17 or something like that, or 19, right? That reduction in the dollar supply, that's going to be absolutely brutal to these crypto scams, right? um and we're in a crowded market as well, right? I mean, a lot of people understandably have got a little bit addicted to the altcoin game. Um, and it's, markets have a weird way of punishing you for doing what everyone else is doing, right? They like to punish the majority. So people are trying to buy the dip on altcoins whilst the Federal
Naka,
Reserve.
Naka,
Oh, go
before
ahead.
you
Yeah.
can before I continue, dude,
Yeah, sure.
I'm warning you, please be sure to not speak ill on the most life-changing technology to ever hit our generation, which is called AVAX. But you can continue. I'm listening.
Well, yeah.
I'm listening
Like,
very
look,
closely,
dude.
man.
I like AVAC because I like the tech, which is this, Avalanche consensus, right? So, Avalanche consensus is a good piece of technology, right? But how much do you think Avalanche consensus is worth? Is it worth $100 million? Is it worth $50 million? Is it worth $150 million? I mean, how
It's
good is
worth
this
150
innovation, right?
billion, Naka. I'm
Avalanche
joking. I'm
consensus,
joking.
really? I mean, because anyone can copy it, right? I mean, it's like open source. Um, so somebody's implemented Avalanche consensus, and they've got some brand recognition, they've got some expertise, but really, how much is that worth, right?
Well,
When it comes down to
AVAX is the X factor, Naka. AVAX stands for actually very awesome extreme AVAX. But yeah, that's kind of like the joke that we pass around here. But anyways, getting back
it,
to like some serious
but
talk.
yeah,
Um,
but it's cool tech, right? But like
yeah, yeah,
another thing you can look at, right, is you can look at cryptofees.info, and I'll post that one to the nest as well. So cryptofees.info will tell you how much money people are paying to use blockchains, right? And maybe we can do a little bit of a game with this, okay? With Avalanche, right? How much money are people paying every day to use AVAX? And then if you take the market cap of AVAX divided by the amount of money people are paying to use it every year, what number do you think you get? So like a PE ratio for AVAX, right? If you take the total market cap divided by the yearly revenue in fees, what do you think that would be?
Probably
yeah,
like
man.
over
When it comes,
5,000, right? I'm
dude,
sure.
dude, when
It's
it
not
comes,
it's not actually that bad anymore. It's currently AVAX has this this P ratio is about 1,000,
Okay.
right? So if AVAX was a business, right, it would pay itself off in 1,000 years. You'd only have to if you bought and hold AVAX like Warren Buffett, right, and you just wanted to hold it and collect the dividends, it would take you 1,000 years before you broke even.
yeah, dude, with chains like that, dude, that created all their fundraisers in 2018, and they wanted to release in 2019, but they looked at the market conditions and they're like, oh no, we want to raise even more money and release during a bull market, right? The crazy thing about these chains and what we're seeing with Solana is that a lot of that TVL, dude, only came from like three people, if we're honest. And like, yes, I understand it's a bear market, but as far as like monthly volume and transactions and activity, dude, you don't go from nine figures down to like the five figures just because it's a bear market. Like there's something fundamentally wrong because even something frothy like osmosis, right? Dude, people are still using that crap, right? That thing still has almost nine figures in liquidity. And how is it that a freaking side chain is producing, it's actually producing more revenue as a system than an entire layer one blockchain? It's not fundamentally sound. And I understand, like, when it comes to these, like, I guess more risk on growth names because that's what crypto is outside of the equity market, right? Nasdaq is like growth, and then crypto is like the growth of the growth or the froth of the froth, right? It's just something's fundamentally wrong. And how is it that you have Alameda wallets still selling Solana ecosystem stuff? Like they should have all been in jail. That wallet should be dead. It should be confiscated, to be honest, if it were possible. But yeah, like at some point especially depending on where you think the bear market is at, fundamentals do make sense. And if you look at what occurs out of the bottom of these crypto bear markets, and I'm not calling bottom here, I'm definitely not. out of the bottom, you always have quote unquote value pump off first, right? In 2015, we saw the alternative payment options, right? You saw Monero, you saw Dash, you saw Litecoin completely outperform off of the bottom. And then the last bear market, right? You had things like Chainlink and Ethereum pump off the bottom. You had things like Matic roaring out of the market, right? Now, whether you think it's value or not, it's up for you to decide. Um, but the fact of the matter is, at that time, things like Ethereum and Chainlink during that bottom did create some sort of innovation or growth within the asset class known as crypto. Right? You had all these DeFi startups. Pretty much scooping up Link and ETH at the lows to create their liquidity pools and pay out insane yield. You had MakerDAO buying a lot of Ethereum and Link. As a matter of fact, I've been saying on the last couple of spaces that I've been hosting, MakerDAO is actually paying some pretty good yield for your DAI. Right now, whether you think it's a scam or not, I'll leave that up to you. But regardless of that, you know, you can't really compare something like Chainlink compared to something like Shiba Inu, right? Or Floki, right? Like fundamentally speaking, Dogecoin and things like Floki and other meme coins, they're literally just like a bet on how many normies are going to pile into the market, right? Whereas things like Chainlink and Ethereum are pretty much a bet on how much use and value is gonna funnel through DeFi, right? So that's what I have to say about that.
Yeah,
But
yeah. I
Wabi,
mean, there's certainly this. Oh, go ahead.
Do you think Doge or Link is going to outperform better next bull market though?
Well, man, just like the last space that I had, it was yesterday. Yeah, I think. Crap, was it yesterday? Yeah, I believe it was yesterday. Um, do I think Doge is actually going to outperform, dude? Man, that hinges on what's going to happen with Twitter. To be honest, Twitter is integrated with like the Mask network, and over the next couple of quarters, that feature is going to be rolled out to users. And essentially, what that means is that Twitter payments are going to be implemented. That can be anything from like super chats, or like the little cash thing to send tips, or whatever Elon wants to do with the content creator program. However that works, right? If Dogecoin is listed among the first payment options, then sure, right? Am I saying it's fundamentally sound? Absolutely not. I don't think it's fundamentally sound at all. But the thing is, I don't get to decide that. The people who get to decide what's fundamentally sound, and for some people, fundamentally sound just means ROI, right? Then sure, Dogecoin might be fundamentally sound, right? And it might reach $1. The market has a way of memeing things into existence. Just look at Tesla, right? Just look at the way Bitcoin topped. We topped at 69K. The S&P during the last bear market bottomed at 666, right? So wouldn't it be funny if Tesla bottoms at $69, right? And then the whole Twitter payments are announced and Dogecoin is one of the first, payment options. Then sure, it might outperform. Maybe Doge goes from like 2 cents or 3 cents all the way to like $1 and change, right? It might pull off a Cardano next cycle. The thing is, it's all up to the user, right? Like the market is made by both buyers and sellers. And if you want to be a shorter, right? If you want to short Doge, because you think it's fundamentally horrible, well, just be aware that when the market does turn, just look at what it's done in prior bull markets, man, right? Now, this isn't a Doge maxi space, but I'm just saying that, like, when the market does get frothy and you want to accumulate as much, percentage gains as possible, then you're going to have to take risks adjusted to your risk management, dude. You know what I'm saying? But
Yeah,
I'm not. I don't really feel comfortable, dude, being someone on Twitter. It's like, oh, buy this token, buy this token. You know what I mean? Because like I understand that.
yeah.
Um,
But I mean, I think there's a good point here, which is the dichotomy between tokens that are going to pump because apes are going to buy them, and tokens that are going to do well because of technology or something like that. Um, I definitely would say be very careful about tokens that are like tech tokens because usually these tech tokens will have a horrific amount of insiders who are dumping on you, right? Like if it's a tech token, there are going to be people who you have to pay a lot of money to build that tech. Now, there are some exceptions to this. Ethereum is probably a pretty strong exception. Chainlink is no longer an exception to this, and Chainlink's performance in the bull market was absolutely horrible. It was probably one of the worst performing tokens because they were dumping, right? They were dumping Link tokens in order to pay ETH gas fees and in order to build up a project treasury, which they're now using to pay a whole lot of research staff who are very expensive. So if it can almost be harmful for you financially if you know a lot about blockchain tech and you try and use that as a basis for investing without understanding this sort of um, paradox of the better the tech is, the worse of an investment it is, because that good tech means expensive, means a lot of salaries, means that tokens are being dumped to pay those salaries, and it means that you, the investor, are going to be paying for them. So I actually think in the bear market, Doge is probably a better buy than Link.
Same,
Because
Naka. Like, I'd feel much better holding it over the
yeah,
course of a bull market. Like, I mean,
Hey,
for
Naka,
all the points that you just
even
made.
the bear market, even the bear market, Doge is better than Link.
Naka Payne, I posted that tweet up top. Uh,
Well,
you
you
should see
got
it.
your wish, Swabby.
Oh.
But the funny,
The thing that went wrong with Luna, right, was Luna was like a ticking time bomb, right? The design is flawed. It has a tendency to explode, and a lot of people who were investing in it during the bull run when it ran up really hard fundamentally didn't understand the tech, but they understood number go up, right? Number go up is the best form of advertising in crypto, right? And this causes problems like Solana and Luna and AVAX from the last bull market, and then Dash from the one before. I mean, as far as I'm aware, Dash was basically a scam in the sense that it was a huge market cap, tiny float, and the devs basically orchestrated a massive short squeeze to push it up to huge highs. If you'd been an early investor in Dash and you'd held,
it went
you
from
made
50 cents
massive.
to
Remember,
it went from
Wabi,
50
remember
cents to
Master Nodes?
1700, bro.
Yeah, right. I mean,
Dude, Dash went from 50 cents to like 17, 1400.
yeah,
That was
right.
insane, dude.
Yeah.
Like,
So, and the way they achieved that was not by having good tech. I mean, like, does anyone on this space know what the tech advantage of Dash
It was
is?
it's just
fast.
a bit faster. That's it. It's just a bit faster.
Far,
But
faster than what?
It's
Is it faster than Sol?
no.
no, it's
Is it
just
is it faster than BSV?
Yes.
I've never used BSV. Never.
I don't think it's faster than BSV. BSV has an infinite block size. Nothing's faster than BSV, right? Like,
I
like
think it's also like the logoing, dude. And back then,
the logo.
It
yeah,
was
it's
like
the logo.
DoorDash.
Dash.
Dude,
It's
like the
Dash.
thing
It's
is,
so fast. It's dashing. Like
you want to know what's crazy, dude? DoorDash actually stole the D from Dash. Like it's
there we
literally
go.
the same thing.
It's such a
That's
good logo
crazy.
that
I
you
was gonna
that,
say,
that
bro,
DoorDash
they're so similar.
DoorDash stole the logo, right? Like,
But
but really, and this is the problem with crypto investing, right? In crypto investing, right, there is a story that's told, right, about a token. There is the price action of the token, and then there's the actual cause of that price action. And often the cause of the price action has nothing to do with the story that people tell you, right? Like, people may have told you that our Dash is fast. I mean, what? Is it faster than Litecoin? I mean, how fucking fast do you need to be, dude? Like, how much of a rush are you in to, like, pay for those drugs? If it's like 3 seconds as opposed to 4 seconds, does it really matter? Does that 1 second advantage that Dash has over Litecoin justify, pumping like fucking 300 gazillion percent? No, it doesn't. The tech story is bullshit, right? In most cases. The real reason that Dash pumped was because the devs pulled off a scam where they didn't sell much of the coin. There was a tiny float. They kind of dumped it down a bit. They bought everything up and they just orchestrated a short squeeze with no fucking supply. There was no supply of Dash. So, people were shorting it like, well, it has to go down. Well, no, it doesn't have to go down because there's no supply, right? In a market where you have people who are leverage short and you have no spot sellers, the leverage shorts they're just going to wind it up to infinity, right? The price can literally go to infinity if there is nobody who even has a single dash coin,
Naka,
like an actual physical
Naka,
dash coin to
not
sell. Yeah, go ahead.
Naka. Now I'm not trying to cause any hopium here. I'm not. I want to make that very clear. But that's kind of the same thing that's occurring to Luna V2 at the moment. There are pretty much.
Okay, but I don't talk about that specific stuff because I don't know the specific tokenomics of fucking Luna 2 or any of this shit, right? But the meta point is far more important. Crypto is full of lies, right? It's full of lies. Most things you hear about crypto are lies, stories, confabulations, bullshit, right? Another good example of bullshit is Solana, right? Do you remember in like early 2021, Solana was pumping really hard. It just would not go down. It was up only from like, $2, eventually ended up at like 60 or something in the 2021
That was the NFT bull
spring top.
market days.
Right. And the story that people were telling you about the Sol token was like it's going up because it's faster than ETH. Because it has it has 700,000 transactions
That was
per
cap.
second,
That was
right?
cap.
So, but you see, this was a lie, right? What was the actual? We now know the actual reason that Sol kept going up, right? Which was that the FTX exchange, which is one of the biggest exchanges, was stealing your money, your funds that you deposited there, stealing your Bitcoin, stealing your ETH, stealing your dollars, stealing everything, and using that money to pump Sol. So they were basically buying up the Sol supply off the market, so there were no sellers. Nobody could sell spot Sol, right? And that's how the thing pumped from like $1 to $60 in like the first 5 months of 2021. Then obviously everything dumped, right? Everything dumped because people got over leveraged, people ate too much, including myself. And then Sol pumped again, and it was again the same thing. It was SBF and Alameda pumping Sol by stealing your funds that you were depositing into the FTX exchange. But they didn't tell you that, right? They didn't tell you, oh, the reason this is pumping is because it's a fraud, right? What they told you was they said, well, it's pumping because it's got great technology, it's got great NFTs, it's got such a lovely user interface. I mean, like user interface design is not worth a fucking $1 trillion, right? Okay, it's not that expensive to make a user interface. You hire some devs and they code it for you, and you can get devs for less than $1 trillion or 300 billion or whatever the fuck Sol ended up getting to, right?
Naka, let me ask you a question, man. Do you think
Yeah.
that operation that Alameda had caused sort of depreciated the price potential that Bitcoin and Ethereum looked well on track to do? Or do you think the market just did what the market did?
Well, yeah, because what was happening was, let's say Bob wants to buy some Bitcoin and Ethereum. He's not interested in Sol, right? So he gets some money from his McDonald's job and he puts it into his bank and he transfers it from his bank to FTX. And on FTX, he uses his dollars to buy Bitcoin and ETH. Except the FTX user interface is lying to him and they didn't actually buy any Bitcoin. So you have this paper Bitcoin and paper Ethereum as well. So both of them were being rehypothecated. So like he thought he had Bitcoin, he thought he had ETH, he didn't have any of either of them, and they just take that money and they use that to pump Sol, right? And then when it gets to the top, they dump their Sol bags, they dump their Sol ecosystem bags, and they just basically make all this money. And then, of course, at the end of the day, that means that Bob, who thinks he has, 3 Bitcoins and 50 Ether, right, or maybe whatever he has, right, he actually, one day the FTX exchange just says, oh, withdrawals are not allowed anymore, and he's actually just lost everything, right? So, yes, probably if people weren't using centralized exchanges at all, if they had to physically buy every Bitcoin, physically buy every Ether and put it on a hardware wallet, yeah, we probably would have got to 10K ETH and 100K Bitcoin, right? It just is what it is. It's you're never gonna entirely fix the paper Bitcoin problem. But if we had gone higher, it still would have crashed, and it just would have made the crash more vicious, right? Because people are going to start selling, and then selling begets more selling, and so on and so forth. So, But I think that the key point there is just the idea that in order to be successful in crypto, you have to understand that you are in a sort of hostile information environment, right? Everything that everyone's saying is questionable, right?
It's hearsay. It can be anything.
It can be a lie, like Sam was lying, right? He was literally lying. It can be other people repeating the lie and they don't realize it's a lie. You can have these strange effects where, if everyone starts shorting something at the bottom and there's no spot sellers, you get this kind of bearish consensus, and that actually makes the thing pop off because there's suddenly, like, when you have a bunch of people shorting something, those people are actually buyers, right? Because when they get liquidated, they'll buy, right? So you and then on the tech side, you also have this, right? You have these situations where when Ethereum in 2021, when Ethereum was like having its run in like February or something, and it kind of like basically eclipsed everything, all the ETH maxis like Sasano and just all the other classic ETH maxi guys were like, yeah, this is it, this is nirvana, this is how it's supposed to be. All these other things are fucking scams. Like, this is it's just going to carry on going up forever. All of the crapola fraud chains are going to zero. This is the one true vision of Ethereum, and that was the top, right? Because that euphoria is a situation where there are no more buyers of Ethereum. They've all bought in and they're all happy, right? That's so when you're happy with your investment, that's a dangerous time, and you need to seriously consider whether it's time to sell. Obviously, it's not always going to be time to sell because a trend takes a long time to play out, but you have to look for those signs of trend reversal. You have to know when you need to be a contrarian and when you need to ignore all of the information that's coming into you and say, no, you're all wrong. This is the top. I'm selling. See you later. Right. And that is one mistake I made. I didn't sell my Ethereum in February 2021, and I should have done, right? Because I believed in the project. It's a big mistake. Never believe in any project. If you want to make money in crypto, you have to have absolutely no
the tech is
conviction.
bullshit. Yeah, that's just the biggest fucking bullshit
yeah.
story that anyone can ever say. Oh, bullish in the tech, this, whatever. Yeah, the tech's here. It's already built. We can all see it all. We know it's potentially developing. But if you're saying you're bullish in the tech for one coin and that's solely why you're investing in it, that's bullshit.
Yeah, right. And here's the thing: is sometimes it is right to invest on the basis of the tech, right? But you have to understand. You basically have to understand the tech. You have to understand its implications, but you also have to understand that in a market where you're trying to make money rather than just trying to jerk off over the tech, you need to understand when the market has been exhausted and there are no more buyers. And usually the point when there are no more buyers is when everyone who doubted you and said that the tech was not that good and didn't believe your story or whatever, when they start agreeing with you, like especially the ones who are kind of dumb, who just kind of like shouted you down, when you were buying at the lows, when they start agreeing with you, you really need to sell at that point, right? You need to seriously consider selling, right?
I think another top signal, Naka, is like when people start going from what the tech is, like what's actually built, to hypothesize what it could do. So like,
yeah,
well, when people were like, oh, this is really cool for DeFi, we can trade all these shit coins with Uniswap and stuff. Like after that happened and we got closer to the top, there was more and more people just saying, oh well, this could be the future of real estate on the blockchain, or this could be this and that for all the potential use cases. That's usually a top signal as well.
Exactly.
But I'm saying it right here, man. I'm saying it right here. The next market top is gonna be when an NFT movie gets broadcasted worldwide on all AMC movie theaters. Saying it right now. I'm saying it right now.
When celebrities start to talk about it too, that was the biggest part of the talk.
I mean, dude,
Yeah,
with celebrities,
3 months of the top when celebrities start talking about it.
Celebrities, man, they were talking about it in 2020, 2019. It's really hard, man. That Reese Witherspoon girl was saying how excited she is to make a crypto Twitter account, right, in August of 2021, right? And I mean, we still continue to pump for a couple of months after that. So you got to be really careful when it comes to exactly like what it is you're seeing with with these celebrities. You know, Gary V was talking about crypto for the longest time, dude, since early 2017. You know, there's a video about him talking about Ethereum at like $40,
But when
saying how like, you know, he invested privately into Coinbase in like 2014, you know, and bought a big portion of his net worth into BTC at that time. So you got to be really careful, man, really careful.
Yeah. I mean, sometimes if you get too into this idea of counter trading people, you can actually screw yourself over, because you don't want to counter trade people all the time, right? You want to be counter trading people at the turning points, but you want to be trading with the crowd in a trend, right? And that's the difficult part of
yeah,
trading.
friend of your friend is the oldest saying, though, for sure.
Right, but it isn't always, because eventually the trend changes. So, you know, the difficult part about trading is identifying whether you're in a trend or at a point of trend change. That's what's hard, right? Because if you could just know, oh, this is a point of trend change, okay, be contrarian, just do the
But the
opposite of what you
winners
want
know
to
how
do.
to find the
Yeah.
change before it happens and predict the change before it happens, and that's how you
Right,
make.
right. So and maybe they can't predict it. But maybe they just have some information, right? They have some inkling about it. And when we get close to the top, they start selling a bit. When we get at the top, they sell a bit more. When we're past the top, they sell a little bit more, and so on and so forth. So by the time we're over the top, we're now 10 or 20% down from the top, they've already dumped 80% of their bag, and they're just holding a little 20% moon bag. That's really the way you want to do it. You don't want to sell everything all at once, and you don't want to buy everything all at once. Because generally speaking, you know, even if you're really clued in, you're not going to know the exact top price. Although, funnily enough, there is a kind of weird thing that happens where people will literally just point out the top and say, oh yeah, this is probably the top of Ethereum, just based on like the sentiment. Somebody actually did that. Somebody literally posted the Pico top of Ethereum, and I was like, haha, yeah, it probably is. And it was, right? Um, but you know, so anyway, like to get back to the point, you know, if you're interested in trading, right, if you're interested in making money out of crypto, you really have to think about it as an information game rather than a technology game, right? And this is kind of the key. Stop thinking about what the tech is. I mean, yes, understand the tech, right, because understanding it will help you, but think about not just what is the tech, not just what are the brand recognition, you know, who's interested in this, but what's the information, right? Where do I have an information advantage over the market? And, you know, one example of that would be if you were around with money in the COVID crash and you saw Ethereum dumping down to $80, you could have been like, look, you know, Ethereum at $80, that is a good deal because I can work out the market cap of Ethereum, and I can see what that compares to, you know, in terms of other companies, and I can see that Ethereum has way more potential. I can work out the market cap of Bitcoin at that point and see, you know, that it has a lot of potential, you know, compared to say gold or silver or something like that, right? Or if you're at the top of the market, or you think you might be the top, again, you can say, look, well, you know, it could go up, but it's kind of, you're probably a little bit late to that trade now, right? And I've got a tweet, again, I can pin this one, where I basically said this for the top of Solana, right? I mean, I didn't actually sell the top of Solana. I actually already sold by then. But when we got to the top, you know, people getting very, very bullish about it. They were like, oh yeah, this is like hyper, you know, amazing, you know, it's going to go so much higher. And this is my comment. It's like, you know, the problem is not the fact that the VCs are going to dump. It's that Sol is already a top 5 project in an extremely overheated market. It's already up 500x. There is such a thing as risk-adjusted returns. Congratulations if you got into Solana early. If you're thinking of buying now, yikes face, right? And I'll pin that one as well. So you can, you know, you can see this. I didn't know that was the top, right? It could have had another leg up. Maybe in a different universe, in a different run of the simulation, it did have another leg up and it went to 350 or 400. But, you know, you can see that there are going to be people who are up 500x, right? And they're going to take profit. And if you're just entering this, you know, this investment when other people are up 500x, you are playing with a huge disadvantage, and you shouldn't play that game. You should stay out, conserve your dollars, and wait, right? So as I said, it's all about information advantage. Where do you have the advantage? Where do you not? And probably one thing on the topic of information advantage and crypto that I think probably a lot of people haven't realized yet is a lot of people are thinking about crypto in the future as there being a lot of different blockchains, right? Because right now there are a lot of different blockchains. So there's like Solana, there's AVAX, there's DOT, there's Gnosis, there's Matic, there's all of these different blockchains, right? I don't think the future is going to be like that. I think the future is going to be a few, one or two blockchains, maybe three, something like that, and there's going to be lots of ecosystems of L2s hanging around those blockchains. Probably the biggest one's going to be ETH, but there are probably going to be some others as well. We don't know which ones. So I think if you want like a little piece of informational edge that most people don't get, the future is going to have fewer blockchains than the present.
I mean, they'll try and have everything on one.
Yeah, I mean, they can try that. I mean, if you have a blockchain which has a lot of stuff on it, you run into the blockchain trilemma, which is, if you have a blockchain with a lot of stuff, you need a really, really beefy computer to be a validator for it. Wabi seems to have disappeared. He's now not a speaker. I don't understand what happened, but I'll keep talking anyway. What's up?
He might have rugged. I see that he says he's a speaker. He's waving.
Yeah, he's not as speaker as me. I can't hear him, and I can't see him as a speaker. But anyway, let me just
join and read back.
He'll have to rejoin, yeah. But I mean, if you have a blockchain that has a huge amount of activity on it, it loses decentralization, right? So you can have blockchains like BSV or Solana where the blocks, the amount of information that they're processing is massive. If you want to run a Solana node, you need a computer with 256 gigabytes of RAM. You need like the top of the line internet connection that's on all the time. You need like thousands, like petabytes of hard drive or something like that. The whole thing's just absolutely insane, right?
But that type of stuff would solely come with regulation. Like, I think the regulators, they don't want that to be the case. They don't want decentralized. They want it centralized, and they want to be able to control it and use it, right? Obviously they'd put the money into that at that point to have those type of systems to run all that stuff. But I think once everything's kind of fully regulated.
What's the
Yeah, guys, I'm back. Sorry.
Hey, Rodney. Welcome back.
Hey,
Rodney, welcome, Mr. Carlos.
Hey, how you doing?
Oh, we have Joe Calasari.
Yeah.
Welcome.
Hi, how you doing, Naka? What's the advantage of a centralized blockchain versus just Amazon Web Services?
Yeah, I mean nothing. There's no advantage, right? If you have a blockchain where there's only like 3 people who can actually afford to run a node, then you don't need a blockchain. You can just use this thing called a database, right? We already have databases, so just use that, right? And I think what's going to happen over time is there will be blockchains like Solana, BSV, and probably some others that I don't know about, maybe Aptos as well. I'm not sure exactly how that works, where you need to have basically a supercomputer to run a node. Very few people actually run nodes, and at least in the long run. I mean, maybe they kind of like sponsor a few of them to start with, but in the end, it's going to be a couple. And people will still use them, right? Like normies will, interact with these blockchains on their phone. And in the end, it won't really be that different than using the Google Play Store, right? You'll download some app. Maybe you'll play a game on it. Maybe you'll have some NFTs or something like that. But you won't really have ownership over any of that stuff because, there's like 3 people running the blockchain. If they want to like confiscate your NFTs, they can totally do that, right? Because they can just, they have like a Discord server where they all conspire to do something. And if you disagree, well, fuck you, right? Like it's centralized. So I think there probably will be some things like that, but I don't think those are really going to make it big, and they're probably not very good investments. I think that what's really going to happen moving forward is you're going to have chains like Ethereum, maybe a few others that are going to be quite specialized in being relatively decentralized. So you can run lots of people can run validators at home on like a Raspberry Pi or something, and then all of the processing, all of the high TPS data intensive applications that people want to use are going to move to L2s, right? And I think a lot of people, even though this is kind of like been like a big thing for a while, I still think a lot of people haven't really internalized how the L2 revolution is going to change blockchain. There are not going to be lots of different blockchains. There's going to be like one or two or three, and they're just going to have a lot of L2s. So you're going to be on Boba, you're going to be on Metis, you're going to be on Starkware, you're going to be on Immutable X or something like that, right? And if people ask in 5 years, oh, what blockchain are you using? You'll say, oh, I'm using Boba Network, I'm using Immutable X, I'm using Starkware. But all of those things are actually just add-ons to Ethereum, right? But people just won't bother to say that because it'll just be like everything does that, right? And this has these pretty incredible advantages in that if you have something on one of these L2s, you still have the security and decentralization of Ethereum, right?
No, you don't.
And
It increases the potential for being rugged. You'll have more and more irregular, untested, unproven L2s, and people will get rugged at a higher rate of higher propensity on these very much centralized layer 2 networks.
right, well,
isn't that
so,
what
so you
happened?
can
Isn't that what happened?
you can have a bug in the code, right? So these L2s are going to be complicated, they're going to be buggy, and in fact, a lot of them right now are actually multi-sigs. They're not actually proper L2s yet because the devs don't want to risk making. They don't want to give up their multi-sig because then if there's a problem, they can't fix it, right? So at least in the early days, yes, I think Joe's right. There will be issues, but I think in the long term, it's going to go towards L2s.
Yeah, but the L2 narrative presupposes that people actually want to transact in this crap, and the evidence is completely to the contrary. People buy these things for speculative purposes largely, not for any real academic activity, not for any real use cases or real world problems that are solved. Somebody was saying earlier, like an NFT movie on AMC. Yeah, show me when that happens, okay, and have it have any sort of value. I'm skeptical it ever does, but even if it did, why does that have any financial value other than just a speculative, Chuck E. Cheese token you want to buy so you could flip it to somebody else? There's no value there.
Well, I mean, there's still a real use case for L2s, like because we want to transact on Ethereum ultimately, and it's very expensive. And so, if you want to get the decentralization aspect of Ethereum while still like not spending $80 a transaction, then like in a bull market,
Yeah, I
it's
get
really
it.
expensive. So,
But
I mean, there is a value prop.
but people transact all the time on layer 2s right now, on Ethereum. You know what
Yeah.
it is? Here's how they do it. They log onto their Coinbase and they trade Ethereum nonstop, almost no fees. They charge the exchange charges a fee, right? But that's a layer 2 solution. It's through Coinbase, through their solution. And if they want to settle, they can withdraw on chain. How is that different? We have that right now.
Well, you can't do DeFi on Coinbase.
Well, I mean, so
why not?
different,
They're staking on Coinbase. You can do
right.
all of that on a centralized exchange like Coinbase.
Right. I mean, that's you can also do all of that on a centralized exchange called FTX. A lot of people did, and they discovered what the problem with that was, which is trust. Right, you have a trust assumption that you trust the people running that exchange to not rug you, to not financially
So
censor
how
you,
is that
etc.,
different?
etc.
How is that different from a layer 2? So instead of real human beings, and we know where SBF is, we can haul him away in prison, put handcuffs on him. We're going to distrust some protocol out there to do it for us that we can't even find the creator. That seems like a terrible idea.
Well, I mean, you still can't like go on OpenSea on Coinbase and buy an NFT or stake your shit for some degen yield or
Not yet.
trade shitcoins on Uniswap.
Not yet.
But even I mean, they have Coinbase Wallet, but you're still paying regular ETH gas fees. It's not like it's cheaper in the same way that like
I mean, let me
or Arbitrum.
let me just clarify for some people what's going on here. So, when you have Coinbase is not an L2, right? Coinbase is a centralized exchange.
What's the difference?
The difference is an L2 gives you sovereignty over your assets at the same level of security as Ethereum does, right? So if you have ETH,
but that's not accurate. That doesn't. So even Lightning, okay, and I'm a Bitcoin guy. Like that's not how it works. It does not give you the same sovereignty. It gives you a relative sense of sovereignty, but you still are depending on other custodians.
yeah, but that's not true on ETH.
That's really only when you're bridging that you have to trust it.
No. When you're bridging to an Ethereum L2, you still have full sovereignty over your digital assets. At least not with the ones that are currently in use. That is not actually accurate because they have multi-sigs. The devs can upgrade the contract, right? Which means that in theory, the devs could upgrade the Arbitrum or Optimism contracts to be evil and take all of your stuff.
100%. So you don't
Right.
have sovereignty or custody over your funds. It's no
Right.
different than Coinbase.
Well, okay, but the these L2s that exist in reality, they are not really proper L2s until the devs give up the multi-sig and make the smart contract immutable.
Correct. And guess what? You will find that they will not be able to do that because that is a technological problem that cannot be solved. That is the Oracle
Well,
problem
I mean,
in its definition. Because you
this has nothing to do with oracles, right?
It has 100% to do with oracles. You just have to dig under the hood. The reason why you're not going to be able to make a layer 2 that does not have some sort of person at an end deciding here's what a transaction is, here's the software we're running, here's what's up implementing, is because there's no such person that can answer what the base level protocol needs. You need to have someone to be able to plug in, the base level coding to decide here's what it is. If you don't do that, you have to build it on the main chain. It's a problem that's not solvable.
Joe, that's just not correct. It's just technically wrong.
Okay, so tell me a layer 2 on Ethereum where you don't have to rely on the devs. You just admitted there's no such thing that exists.
Yes, there is no such thing at the moment because
and there never will be because it cannot be solved technologically.
Well, no, it can, but the reason they don't want to give up their multi-sigs is because we are early, right? There could be a bug.
Hold on a second. Hold on.
Yeah.
How can you give up the multi-sig? Tell me technically how you give it up, and you will find the answer to the problem.
You would give it up by just deploying a smart contract to Ethereum that's immutable, that doesn't have upgradability.
Right. So what you're saying is you're giving a smart contract, you're empowering a smart contract to make financial decisions for you, okay? And that smart contract cannot be altered, okay? And if that's on a layer 2 solution, it always will be altered. It always will be alterable by definition of the fact that it's a layer 2 solution.
No, that's not correct. You're just wrong, Joe. Like you are literally just wrong about this.
Listen, I represent one of the biggest Ethereum developers, and he would tell you what you're saying is technically not true on any layer 2 solution.
Bring him up.
Hey guys, look. We're getting a bit off topic here. But Joe, if we can set something up,
let's do it.
The individual. We can do it sometime next week. Joe Naka, my DMs are open for you guys.
It'll be fun. He can explain it better technically than I can.
Yeah. So. Let's try to set up something like more formal for next week. We can try
but I mean, but Wally, what I would say is, I mean, this sounds like getting off topic, but it actually isn't, right? Like, this is actually pretty crucial. Having the right answer to this technical question is crucial to predicting the future of crypto. You can have a layer 2 scaling solution which is trustless in the sense that if you put your ETH, or it doesn't have to be on ETH, it can be on something else as well. It can be on Polkadot or it can be on whatever.
Wouldn't it be able to like do something on Celestial, like the modularity consensus that they're shooting for?
Well, okay, that's a whole different kettle of fish, right? So
yeah,
all I'm talking about is layer 2s, roll-ups, right? So
so outside of like Arbitrum and Optimism, and like I know the whole situation with Starkware, that's a whole different story. But like, what else is there on Ethereum to look forward to? To be honest, like I have not seen anything else outside of that, and like Optimism and Arbitrum and Starkware, dude. I was hearing about that in like 2019, dude. And it's like
right.
what's after
I mean,
that?
so right now, So there's a site called L2Beat. I'll pin that to the nest where you can see what this stuff is. And as I said, it doesn't have to be Ethereum, right? You could have this happening on other chains as well. These are the L2s that I know about. Polygon Hermes. It's not out yet, but it's under development. Optimism, Arbitrum, Starkware, not out yet, but under development. Looping,
Did you say Hermes?
Polygon Hermes.
Polygon
Hermes.
Hermes? Because I know
Hermes. Hermes.
because I know there's like Hermes protocol, but I think that's like a DeFi farm. I didn't
Yeah,
think.
it's different.
I think
Polygon
it's
Hermes
different.
is going to be with like ZK and stuff, right?
Exactly. So Polygon
Yeah.
Hermes is a ZK zero knowledge rollup. So you have Polygon Hermes, Optimism, Arbitrum, Starkware, Loopring, Boba, ZK Space, Scale, Metis, Immutable X, Aztec, ZK Swap, Myria, Gluon, Serare, and Fuel. There are a lot of L2s, right? And
Yeah.
there's probably going to be a bunch more added, right? In fact, I haven't even found all of them. There's
So and like all these
Rhino.fi,
things,
Apex.
and all these things have like ecosystems because like I have played around with Metis, and my goodness, man, my goodness, like the bridging experience needs to be cleaned up. It really, really, really does. And like, if Ethereum is going to take a few years to do that, then so be it. But I think like crypto as a whole, dude, they're really, really, really looking to extract value from people that are onboarded. Like, oh, bridge to our ecosystem. No, bridge to our ecosystem. Like, if you guys have ever tried to bridge to Kanto, it is literally the worst experience that I have ever done in this industry.
Even Matic sucks.
Yeah.
Yeah, and it's like
Yeah. I mean, like, there's obviously gonna be stuff that's new and it's not perfected yet, and they need to like improve the UI and stuff like that, right?
Dude.
But like the point is, I count 26 different Ethereum L2 projects being built at the moment.
And none of them will solve the problem. And the reason they can't solve the problem is because you talk about Apex, okay? Apex gives you speed from offering 2 nodes. You have 2 nodes that are controlled by one user. How is that preferable to Coinbase?
Well, Apex is actually not a rollup. Apex is what's called a Validium. So there is like a sort of how can I put it? There is a sort of zoo of these things which offer different security properties. So Arbitrum and Optimism are optimistic rollups, right? Loopring, Polygon Hermes, those are ZK rollups with zero knowledge. The way an optimistic rollup works is you do stuff on the rollup, right? And then at some point, the sequencer, which is centralized, it doesn't have to be centralized, but it can be, submits a sort of summary of what's happened. There is then a challenge period for 7 days where anybody can submit a fraud proof that proves that centralized sequencer has actually tried to screw people over. If the proof is correct, and this is done on Ethereum, by the way, then whoever cheated gets fined and people get their money back. So it's optimistic rollups are optimistic in the sense that they assume that everyone's honest and they wait 7 days for somebody to produce proof that there's been fraud. Kind of in a sort of legalistic way, right? Joe's a lawyer, so you would appreciate that. I mean, our legal system is sort of optimistic.
So let me understand this straight.
Yeah.
So you're saying, and I'm not as familiar with it. It sounds like as you. I've just read a little bit about it. But you're saying there's effectively a 7-day rollback period where the transaction can be reversed? That sounds like a terrible protocol.
Right. So there is a 7-day
Sounds awful.
challenge period. There's a 7-day challenge period, right?
Right. Which by definition, if you can challenge something for 7 days, you can reverse it, right? Theoretically, by what you're saying is that any transaction, if it were fraudulent or incorrect, can be reversed after 7 days. Why is that?
I can't hear Joe. I'm going to leave and come back real quick.
Okay, so it's not if it's fraudulent. So the roll-up sequencer will publish a bunch of blocks, A, B, C, D, E, F, G, right? That just do stuff. Okay, and then at the end of all those blocks, some people end up with certain ETH balances, right? Like I make a trade, I buy low and I sell high, I end up with more ETH. At the end of a certain period, there will be a certain state, and the sequencer will then say, okay, I'm going to post this state to mainnet ETH, right? And that's expensive because there's limited processing capability and limited data on ETH, right? It settles it, right? So when it does that, you can challenge it, right? If it makes a summary of what's happened that is not accurate, right? So, I bought something for 1 ETH and I sold it for 3 ETH, so I have some profit. So my balance should have gone up. But then if the sequencer tries to make a summary that doesn't give me that extra balance, that is a fraud in this technical sense. And I could submit a fraud proof and I could not only get my money back, but also get a bonus for
Who
having
is the
caught.
arbiter of the fraud proof?
It's a smart contract, right? It's a proof. It's math. There's no.
Not math. Who is the
It
arbiter of
is
the
math.
who decides if it was fraudulent? Who decides?
It's just pure math, right? It's just, did A, B, C, D, E, F, G end in this state or not? That's all it is, and you just give a mathematical proof of that. So it's not
You
like,
can keep saying it's pure math, but ultimately, if you're going to detect fraud, someone has to
so
decide.
so, so no. When I say fraud, I don't mean fraud in the everyday sense. I mean fraud in the very specific mathematical sense that does this result follow from these
How
sequential
would fraud
steps.
occur? How, in the mathematical sense, to use your terms, how
Right.
would it?
So you could have a situation where you put some ETH onto the roll up, and then a week later the sequencer says, "Oh, you don't have any ETH anymore,"
Why would it say you don't have any ETH anymore if it's just math?
because this sequencer is centralized, right? It can publish whatever it wants.
Okay, so
It's not
centralized
decentralized.
it can publish inaccurate or accurate. Let's just abandon the term fraud because I think it's clunky. It
Yeah,
can
yeah, yeah.
sequencer can publish accurate or inaccurate information,
Yes.
and then once you want to challenge the accuracy of the information, you need what? You need to do what to accomplish to overcome an inaccurate reflection of a transaction. How do you do that?
I mean, it's automated, right? I don't know the details on exactly how it's
That
done,
sounds
but
like hand
you
waving.
just
That just sounds
it's
like, oh,
well,
I don't know. It figures it out. It's just math.
well, it is literally just math. That's why it's called a fraud proof, right? So there is a record of these things. They've been digitally signed. You have a sequence of state transitions, and if somebody's cheated, there must be an invalid state transition somewhere. You point out where it is. I believe the protocol that they use for this is something with logarithmic time complexity, because you sort of cut the sequence of transitions into intervals until you eventually figure out which state transition is invalid. I mean, I don't have the exact technical details on how this is done available, but
And that's the point. Most of the time, this is hand waving. This is people saying, "Oh, it's just math. It's algorithmically done."
but it really is just math. It
No, it's
really is
not.
just math.
It's not.
It
It's all
is.
at its
It is.
core.
I promise you, it is.
Whether it's Luna, whether it's algorithmic stable coins, whether it's any of these things, at its core, it's human beings that have proprietary governance and control over these things, and they fail. That's the point. So there is beauty and
I'm
simplicity, and
yeah.
that's why Bitcoin succeeds. I don't know. D++ is smarter than I am. She's here. She could talk about it.
Right. I mean, I don't think D++ is going to tell me that optimistic rollups don't work. But I mean, it really is just math. There's ZK rollups, which is a bunch of math that's more complicated, and you know, not wanting to drag us too far away from where we're going, I think the fact that rollups are coming is going to have a huge impact on crypto. We might even get rollups for Bitcoin, right? I mean, people are talking about ZK rollups for Bitcoin and stuff like that.
Naka, how do you? And I proposed this question in our Discord for the Because Bitcoin Discord yesterday, and I threw a scenario. What if next cycle there are actual shit coins launched on Bitcoin? How would that work? And one of our
It would be rollups. It would be rollups,
and
right?
there was somebody in there. His name's Babel on Twitter, and he essentially said that Lightning would be shut off, and any chance of mass adoption would have been canned, essentially. And
Well,
I'm
I
not.
mean, so here's an interesting fact about Bitcoin. Bitcoin doesn't have enough block space for everyone in the world to use Lightning, right? It tops out at like 100 million people being able to use it. So
Not gonna.
Bitcoin's gonna have to do something, right?
How would the UI even look like, man? Like if I want to buy, say I want to buy, a token, and it's sort of like an Aave, right? Put my BTC in there, borrow against it, and I want to borrow, say like Aave on BTC, right? Not Aave itself, but a lending protocol. And I have that token, and I stake that token, and the revenue that I get is derived based on the amount of fees that go through that system. Whether it works or not, I don't know, but I'm not exactly sure how the UI would work. I have
Right. But I
never
mean,
I have never in my
like
entire
we
life like experienced anything other than, using using a basic ledger, bro.
Yeah,
To be
but I
honest.
mean, we're kind of getting ahead of ourselves a bit there because Bitcoin somehow has to work out how to make layer twos work. That, well, Lightning's already a layer two, but it has to get some other form of layer two working for this to happen, right? Something that's Turing complete. But I mean, there are people who are working on it, right? There are certainly people who work on it. There's even these people who are working on this drive chains thing that I've been investigating a bit, which is quite a lot of
What is that, Knock? I saw you were doing a space about drive
on
chains.
drive chains. Yeah.
Yeah. Is that
Yeah.
like a
I mean,
motorcycle or something, dude? Like you turn it on and it
so
mines Bitcoin?
basically, okay, so drive chains are a way for Bitcoin to run. You can have Ethereum as a Bitcoin layer two. You can have Zcash as a Bitcoin layer two as a drive chain. Um, they need two BIPs to happen for it to work, which is BIP 300 and BIP 301. Um, then you could basically, they're also thinking of basically getting Bitcoin Cash to run as a Bitcoin layer two effectively. It's called Thunder. So you'd have Lightning and Thunder. Get it? Um,
Like
but
Thor? Are they gonna have a protocol, the Thor protocol?
no,
Lock up your
no, 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 no.
BTCs
It's
and all
just,
that stuff?
it's just BCH. It's just like big blocks Bitcoin, but running as a drive chain. The thing is, they would have to accept these Bitcoin improvement proposals, BIP 300 and BIP 301. And there's still a debate as to whether drive chains are actually a good idea. Having investigated it a little bit, I actually don't think they're a good idea because, um, in fact, coming back to what Joe was just talking about, human judgment, the problem with drive chains is they require human judgment, whereas optimistic rollups on Ethereum and ZK rollups don't. Um, so they would require some human judgment. The miners could choose to destroy these L2s. The miners could do all sorts of things that would require judgment and would probably not be a very good idea for Bitcoin. But it's fun to think about.
I see we have D plus plus. Good evening, ma'am. How are you doing today?
Hey, thanks. Doing good. Yeah, thanks for hosting.
No problem. Are there any questions that you would like to bring up to Knocker or myself, or give any statements? Feel free. If anyone in the audience, by the way, wants to come up and join the conversation, any statements or questions, I'll be taking that for the next 15 minutes. So feel free, guys. And yeah, go ahead, D, if you want to bring up anything, feel free.
Yeah, just here to join the conversation. I saw that because Bitcoin.com was hosting this room, and so I saw the word Bitcoin, and so I joined. So I just joined you. So
It's
I'm
like
not.
honey to a bee.
It's like the bat signal
The
up in
bat
the
signal for
sky.
the
It
bat signal for D plus plus.
says
Absolutely.
Bitcoin, so I'm there.
Yeah. But I mean, like going back to what I was saying, I do think L2s are going to change crypto. I think they're going to reduce the number of blockchains a lot, right? I mean, I made a list on my Twitter, and I've pinned the list of. Oh shit! I actually forgot to do that. I retweeted it. Let me pin it to the nest. I made a list of all of the smart contract platforms that are currently in existence. And I actually, even after I did it, realized that I missed a couple. Like I missed Gnosis, and I missed a couple of others as well. Like crypto is like massively bloated, right? There's way too many blockchains, all competing for users, all trying to pay lots of devs to do all sorts of different architectures. And I think this recession is going to act as a sort of filter where a lot of them are not going to make it. And that's a good thing, right? Like any industry, you go through these phases of mania, of just a massive sort of Cambrian explosion of ideas, and they have to be culled. And I think one thing that's going to be instrumental in culling them is going to be L2s. And if Bitcoin manages to get a viable L2 solution, that will cull a lot more of them. Maybe it'll even cull Ethereum, but probably not. But it's possible. So yeah, I think the future is going to be different. I don't think there's going to be like this massive, constant replication of new blockchains. I think it's going to be more about modular blockchains, layer twos, and sort of basically, the next phase in blockchain evolution. And I think if you want to be picking out things based on technology, you have to understand that that's probably going to happen. Um, and that I guess that's my alpha, right? The L2 revolution.
Man, I do have one question, brother. Aka,
Yeah, go ahead.
one question, man. What is the fundamental difference? Let's talk some fundamentals, right? Before we wrap up.
Of a flux
What
capacitor.
what are the differences right now, right? Solana and Thorchain. What are the key fundamental differences? Because they both have crazy user fan bases, right? So for you, Naka,
Yeah.
given that like you've hosted a space with some of the devs that are working on Thorchain, and with what's going on with Solana for you, what are like some of the key differences between both products? Because I mean, at this point, dude, like all altcoins are down 90-ish%. BTC's down almost 80%. So at this point, in my opinion, you should be looking at what narratives you want to bank on for next cycle. I'm not saying DCA around these levels, but it'd be pretty wise to see what exactly you want to bank on for the next cycle outside of BTC and ETH. So what are
Yeah.
the differences between those two products? Because
Well, I
essentially,
mean, so the first thing I would say, Wabi, is actually you don't want to bank on stuff outside of BTC and ETH right now. I think now is a great time to be a Bitcoin maxi, at least if you can slip a bit of ETH maxi in there as well, and just collect. Just wait till it goes down lower, buy some ETH and BTC. Wait till it goes a bit lower, buy some ETH and BTC, and just do that, because we're at a phase where altcoins are overvalued, right? Versus they're overvalued versus the dollar, but they're even more overvalued against ETH and BTC. ETH and BTC share, they don't share a lot, but they share one important property, which is the devs have finished dumping, right? Then I mean, like, Bitcoin kind of still has devs because it has miners who still dump, but even that miner dump is kind of mostly done. There's only like 1.8 million Bitcoins left to be mined. It's about 10% of the supply. The Ethereum Foundation doesn't control much ETH anymore, like far less than 1%. So Bitcoin and ETH are the most commodity-like cryptos. Litecoin and Dogecoin are probably also in that list. It's not even crazy if you just want to go Bitcoin, ETH, and like some Doge and Litecoin if you really, really have to have an altcoin, because those are the ones that, you're not basically paying for these devs, right? So all of this other shit, Rune, Solana, Dot, all of this stuff, you're paying dev salaries in an industry that has to go through a culling period, right? So it's a bad idea to buy altcoins, in my opinion. Going back to the specifics of Rune versus Sol, I mean, they're very different, right? Rune is interesting. In fact, Rune is the one altcoin that you might say you can make an exception for, because Rune is like not a, I mean, it is a blockchain, but it's better to think of it as not a blockchain, right? It's better to think, I mean, technically it is, but
It's
in
like
your
total.
mind, yeah, in your mind, it's better to think of Rune as a massive cross-chain decentralized exchange, because that's what it is. Rune allows you to swap Bitcoin for Ethereum, for Litecoin, in a trustless, decentralized way. So, it's doing, like, there's no, it's not like you're going to go onto Rune and get Rune NFTs, right? That's not what it's for. Rune is supposed to be a piece of infrastructure where you have a wallet like Trust Wallet or something that's going to implement Rune on the back end to do the swaps. Now, the reason that's important is because, before you had people relying on stuff like FTX to do the swaps. Well, that means that FTX is a trusted, centralized party. With Thorchain, you don't have that. You can eliminate that trust, and you can use a sort of trustless, decentralized method to do swaps. So, I mean, is very bullish in that sense. Technically, I'm very bullish on it, but because of the tokenomics of Rune, if ETH and BTC go down, like Rune goes down even harder, right? So it's a bit risky. Solana, Polkadot, like Tezos, all of these different blockchains, I'm bearish on all of them, right? I think, I would love to see most blockchains die in the next 24 months, right? It's probably not going to happen, but maybe instead of having like 50 different smart contract platforms, we'll go down to having like 10, and like 5 of those are going to be nearly dead, right? We need to go through a culling period, basically. I would put Sol into that category as well.
I mean, Solana, or should I say Soylana, is definitely a kaput.
Soylenta.
Soylenta, bro. Soy polenta, man. It is kaput. It is a dog shit scam coin. Obviously the whole SBF thing has just dragged it through the mud. It was already going here anyways, regardless without that news. It just helped it get here, and obviously a lot fucking quicker. The whole other thing about Soylana and why it will probably be at its demise now and kaput is because who else is gonna trust Anatoly and that team now as well too? Like, I don't trust
Frank
Anatoly and any of
left.
those people at all, man. I think they're fucking scammers, man. If he tries to
Frank
act
leaving
like
was crazy, bro.
yeah,
Yeah,
that
dude.
too.
And the
All
crazy
that
thing
stuff.
is, dude, like some of you guys know that I've been doing some space hopping, going to like the NFT and Web3 spaces, even though, for some of you it's kind of cringe. I like to do it. And like I've been in the same spaces as Frank, and my goodness, if there was any individual to be bearish on for the next cycle, it is that guy. That is like that is gosh, who was cocky during the last bear market? I know there was Andre Cronje and definitely some of the lunatics. So it's like combine the lunatics and Andre Cronje and Danny Sesta and all that other froth and wrap it into one guy who literally smokes pot and tells you how hard he's working, but then tries to talk macro and then laughs and then you hear him rip a bong. Like I've heard this guy rip a bong, bro. And dude, the guy was in the Solana store in Miami, and that was another event too that made me so bearish on all of that, bro. The guy went up on a sofa and drank non-alcoholic beer out of somebody's Solana shoe. And you're telling me you want to trust that guy to build an
Yeah,
NFT
bearish on
project to
that
reach
guy,
a
bro.
market cap of $1 billion? You're trusting that guy to run your NFT spot to $1 billion in
I
market
mean,
cap. Like,
I mean, like,
Not to
look,
mention a
I
lot
don't
of
want to.
bad things you see popping up
Yeah,
about that guy right now. A lot of
I
bad
mean,
yeah,
things.
yeah.
guys, I don't want to get super bearish on Sol because at this stage we don't know which blockchains are going to make it, right? Like Sol might make it to the next bull run. It's possible, right?
I think they
But
will, bro.
it's
I mean,
possible.
what's
It's
Possible.
possible.
I
what's
mean,
the
for like
Anything's a
Neo,
possibility.
maybe because Neo. I mean, it didn't reach all time high, but I mean, it still did a
Yeah, it just
40x from
pumped.
the
Yeah,
low,
right.
right?
It pumped. It
But it had to
pumped.
do a rebrand. Neo literally had to rebrand into like a BSC shitcoin. Like it had to, like they did something like in they became like a side chain on Binance Smart Chain. Like they had I think it was called Flamingo Finance, and so like that whole ecosystem, the whole smart economy on Neo had to shift. So I mean, Solana's probably gonna have to shift, but the thing is, it's like what happens when the Solana store goes out of business? Because I mean, dude, it's not
Then
looking
you get
good.
then you get a margin call on the Solana phone. But look, I want to just bring it back to the sort of broader point of where the market's going, right? Like, let me read off a few of these different chains: Sui,
Yeah.
Aster, Rose, Cadena, Neo, Tezos, HBAR, Celo, Casper,
Oh gosh.
Radix, Aptos, Phantom,
Oh
Atom, Algo, Dot, BNB, Matic, AVAX, ADA. Those are all fucking smart contract blockchains, and that's not even all of them because I missed Gnosis. I probably
yeah.
There's
missed
a
a few
lot. There's
others,
too
right?
many to name.
There's way too many of them.
Yeah.
There are
Well,
way
not
too many.
Naka. I think like what we have to look for are things like, keep it simple, right? Cosmos and Ethereum. Cosmos has zero, and I mean zero overhead risk of VCs dumping on you. Like they're
Yeah,
all
I mean the problem with Cosmos is the Atom has fucked tokenomics, right? The Atom token is fucked. And the reason the Atom token is fucked is because it's not used to pay fees by blockchains that are using IBC, right? Because Atom doesn't have shared security. And this is something else that on the technical side, I think you really have to understand now, the difference between chains that have shared security and the ones that don't. So if you're one of these Cosmos blockchains, right? And you have like inter-blockchain communication, that all sounds great, right? But somebody can come and attack any one of these chains with a 51% attack and then start doing naughty things on it, right? And they can attack the smallest one, right? They can attack the smallest Cosmos chain and take it over, right? Whereas with Ethereum, if you have Ethereum L2s and stuff, you can't do that because they all have shared economic security behind the ETH token, right?
Well, no rugs have gone on in Cosmos so far. Like within
Yeah, but this isn't a rug. This is like
Yeah.
somebody buying up 51% or more of the stake from like, whatever the smallest Cosmos chain is. It's not a rug. It's people using the
So like an
protocol as it was
Audrey,
designed.
like are you talking
Just
like
literally just literally doing an attack on it, just buying up the stake and then, censoring transactions, doing double spends, any kind of shit like that, right?
I mean, the thing with Cosmos is that a lot of those tokens are like low float. Like you have
Yeah,
you have the
right. So
Osmo token. You even have Rune, like a lot of the quote unquote circulating supply, dude. Like that area, right, in crypto, like all those tokens, are just sitting in someone's wallet.
yeah,
Like
yeah,
they're
yeah,
just
yeah,
sitting in
yeah. So I mean,
wallets.
a lot of it you can't do at the moment because it's centralized, because somebody has like all the supply. But in the long run, the idea of these things being truly decentralized and not having shared economic security is fundamentally broken, right? Because you just attack whichever the smallest one is, and then because they're all bridged to each other, you can just like propagate your attack along the bridges, right? So you can like do naughty things on the smallest one and then like start draining the bridges and stuff. So Atom does have a plan in the long term to get shared economic security, but the fact that it doesn't have it means that the Atom token is useless, right? You don't pay fees in Atom. You pay fees in DVPN or fucking what's that like decentralized hosting coin, Akash, right? You pay fees in Akash on the Akash chain. You don't pay fees in Atom, right? And because of that, it means that the Atom token is not a very good way to punt on the Cosmos ecosystem. So I think maybe, or at least it isn't right now. Maybe they're going to change that in the future. I don't know. They plan to, but I don't know how serious the plan is. So I think like things like that, I think that's a case where it is sort of useful to understand a little bit about the technology so that you don't end up buying Atom because you're bullish on Cosmos, but it's actually not used, right? Um,
I mean,
so yeah,
like the run that I had over the summer, it's really just speculation, right?
yeah. But the
Um,
thing is, like, ETH is also just speculation, but at
it
the
has
same
use,
time,
yeah,
you have to
yeah,
actually pay fees in ETH. You don't pay fees
yeah,
in Atom, right?
yeah.
And so the fact that people are not spending this is kind of bearish. And at the same time, some people are actually staking this and they're getting staking yields.
But
So
yeah, I was gonna say
but,
the
yeah,
staking could be an argument for like
Yeah,
since you
because
don't
you get
spend it, you
airdrops, like
have to
crazy
stake it and you get
airdrops.
crazy airdrops. So I mean,
right. Well, you
Yeah.
until
get
those
crazy
incentives
airdrops.
go
Yes.
away.
Right. But, crazy airdrops is not like a long-term sustainable security model, right?
It's fair.
Right. And the staking of Atom is inflationary staking, right? Those atoms are printed out of thin air to pay the stakers, right? So whereas ETH staking is not inflationary because it's paid for by people who pay fees to use the Ethereum blockchain because the ETH token is it provides economic security not just for ETH but for the whole Ethereum L2 ecosystem. All of the L2s have to pay fees in ETH. I repeat, all of the Ethereum L2s have to pay fees in ETH, right? Whereas the Cosmos IBC chains don't have to pay fees in Atom, and this is kind of like the big difference.
It
But
kind of that just makes me want to just buy ETH instead of trying to bet on the L2 that might make it. Because I mean, is ETH really
yeah,
just going to
right.
absorb all the
But
stuff that's going to be built on top
yeah,
of it?
I mean, I think probably right now it's good to you know, if we dump down, if you have little panic attacks over the stock market, it's good to you know, DCA into ETH. But the problem is this is kind of like not very good alpha because too many people understand it, right? There are too many people, especially people with big hedge funds and big money behind them, who understand that ETH is good and it's like a really high quality crypto asset that you can just, you know, DCA into in the bear market. But like, you know, if you don't have any other good options because it's like fucking down only season, that's what you have to do, right?
Yeah, I think like Ethereum is essentially QQQ in this market.
Yeah, yeah,
So
yeah. I agree. I agree completely. You hit the nail on the head, Wabi. But I mean, like, what's again to come back to the idea of informational advantage, right? Just knowing about ETH is no longer a big informational advantage,
I mean,
right?
dude, like there's a lot of the social capital that entered crypto that migrated out of ETH, and they are diehard Hedera and Algo and VeChain and Solana bag holders. I kid you
Yeah.
not, man.
And
Like
ADA, yeah, no, you're
I've been. I mean, you can ask some of the guys in the Because Bitcoin community. You can ask Kim Chi. You can ask Payne. You know, like you typically after these spaces later on in the night, I'll do my hunting and not really digging for alpha, but more
we go to the trenches.
like honestly trying to strike up a conversation with these people and be like, you know, what got you into the market, and like essentially in the most polite way possible, why are you bag holding? And I am kidding you, bro. I am not kidding you. A lot of these people do not care about macro. They do not care about like
Not at all.
what goes on in the
Because they
stablecoin
don't
market.
understand it. They're just
Like,
concerned
dude,
about
they
their
don't.
NFT that's
They
going to
get their
hopefully get
macro
bought.
news from Watch Your Guru, bro.
Yeah, exactly. That's the only macro news you get, and most of them are stuck holding on to their
Dude,
NFTs, and they're hoping that their NFTs are still valuable at some point, so that they can sell the immense amount of capital locked into their NFT that they think they have.
yeah. So, so let me give you like a brief rundown of all of some of the blockchains you mentioned, Naka. All right. So as far as the Solana community, dude, those people literally just smoke like drugs
Opium.
and they throw darts at NFTs, right? And they think Web3 is going to revolutionize everything we do on a day-to-day basis, and they truly think their NFT collection is going to change the world, right? And then we have a second community, Algorand, right? They think Algorand is going to produce like tokenized assets, right? Like tokenized stocks into their blockchain. And you're going to use the Algorand stablecoin that's being developed to purchase everything in crypto. Like they think it's going to flip Ethereum, and they don't care about, you know, how the token sale was done via Dutch auction, and a lot of the VCs bought in like the $3, $4 range, and that they're underwater, and there's always going to be consistent sell pressure, right? And then, you know, Cardano is sort of like, it's always going to be that retail bag holder coin. And then you have other things like Hedera, which didn't really kick off last cycle. And I mean, they think that they're gonna do what Neo said that they were gonna do, like the smart economy, that everything we do on a day to day basis, from the way we put gasoline, from the way we get paid, it's all gonna be on Hashgraph tech, and like they don't care if they buy the top. They think that, you know, Hedera is gonna be more than $1 no matter what in the next 5 to 10 years. They don't really pay attention to what goes on into the traditional markets because, like Algorand, they think that everything is going to be ported over to their blockchain. So it's like you have the quote unquote enterprise blockchains, Hedera and Algorand, kind of going at each other, right? And that's essentially the TLDR of the most active spaces on crypto Twitter, those
Okay.
communities.
Yeah.
So
I mean,
it's all coke, dude. Like we're at that stage.
yeah,
We like
the
if you look
coke
at the Wall
stage.
Street chart, dude, we are on a sentiment basis. we're in denial. Like we're a little bit below denial. And right now with Solana, we're seeing, I mean, what is it? Panic,
Anger
capitulation. Oh, you think we're in anger right now? You don't think
for
we're in?
Solana.
I think we're in capitulation. Like, oh my goodness, I need to get out. Like, dude, Sam. I mean, not
Yeah.
Sam. This other freak, Frank.
We're
Um,
slowly-ish in a capitulation zone for sure. I mean,
yeah, we're there,
we're
dude.
there. Yeah, I'd say we're knocking on the door now.
I say angle.
On
I
the
say anger because a lot of people were like, "Fuck you, Frank! I can't believe you left.
I mean,
How could you leave us for six
and
million?"
and the
What do you
crazy
think,
part,
bro?
dude, the crazy part is that a few nights ago, I was in a space and this individual was getting so angry at another individual because they were talking bad about Frank and saying how Frank is going to do X, Y, and Z and Rug, and how, she needs to go over to that space to cause some problems because she doesn't like it when people talk bad about Frank when there's nothing like, concrete about it. And turns
That's
Bro,
out,
to be honest, Frank is smart for taking that. I mean, shit, dude. It's like I wouldn't be wanting my entire ecosystem to be on Sol either. Like, I don't blame him for a second, bro. If Polygon offered me 6 mil to fucking bridge my project there, dude, I'd
yeah.
take that any day of the week. Like,
Yeah, and there's no way to put that on a data chart. Like that's the thing with crypto sometimes is that as many charts and as many data points that we can look at, sometimes these like fundamentally bearish things do happen. So
Yeah. I mean,
yeah,
I think what needs to happen is there needs to be a culling of a lot of this sort of these bag holder communities, right? Like, and that's not going to happen quickly. It's going to happen slowly, and I think probably the biggest trap is going to be if you start buying into these bag holder communities before the culling is over, right? Because what you really want to do is you want to be holding Bitcoin, ETH, and mostly dollars until the market bottoms. And then when it bottoms, you probably mostly want to be holding Bitcoin and ETH with a little bit of dollars left over to buy the remaining dips. And that way you're not going to end up in a bag holder community because the Hedera people who think Hedera Hashgraph is going to take over the world, well, they're probably wrong, right? I mean, like, they can't all be right? Like the Sol people, the Hedera people, the Dot people, they can't all be right. Like, somebody's going to be left as the evolutionary dead end of blockchain. In fact, most of them are going to be left over as an evolutionary dead end of blockchain. And I think the way things are probably going to play out is it's going to be bullish Ethereum, it's going to be bullish Celestia, because I think we're heading for modular. By the way, we have some background noise, I think, from Field Pain. I don't know who it's
oh my
from.
bad.
Yeah. Oh yeah. I mean,
yeah.
I think
So
I think the way this is heading is modular, right? So
yeah,
basically,
I'm gonna
um,
not go. I'm actually gonna have Nick on the show early next year. I'm gonna have him and
who's Nick? Who's
Nick
Nick?
is the founder of Celestia. Yeah.
Nick is the founder of Celestia. Holy shit, dude!
Yeah, so
That's sweet.
I'm gonna have him on the show. So, it's gonna be a closed space. Like I'm not really gonna have many people like to just bombard the space like I usually do it. So, it's gonna be a closed panel. It's probably just gonna be like me, him, and two other people, and that's it. But it's gonna be him, and then it's gonna be Sunny Aguirre from Cosmos, and then Jack from Cosmo. It's gonna be like one space after the next, and then it's gonna be like kind of like a panel of them, given that they're all working on Cosmos. So definitely some special things in the works because Bitcoin community and overall like crypto Twitter spaces. Like I do want this to be like a one stop shop where I host at least like one special guest from the dev side of things. Um, as the show progresses. But one thing like I definitely don't want to do is like have some shitcoin up here, dude. No way. I'd rather have like if I'm gonna have a dev, right? I want someone like someone who works on general consensus. So like Nick, he's doing general
Yeah.
consensus work for
for Celestia. Jack and Sunny, they do overall work for Cosmos. Or someone like Vitalik, he does overall work for Ethereum.
Yeah, we should get Vitalik on the show. We have a question from Nicholas
Yeah. Nick, go ahead,
555X
brother.
though.
Go ahead, brother.
To add to the Solana fruit, I think that Solana is doomed because FTX and Alameda, they hold more than 60 million SOL that will be vesting for the next 5 years. And all that sell pressure is going to affect the price immensely. And and all of that SOL that is going to be sold is going to go directly to the bankruptcy claims.
Yeah,
That's true.
it's
The flip side to
dealing
that, just to play devil's advocate, is that the bankruptcy proceedings could take longer than the next bull market takes. So
oh shit! Yeah,
that's technically locked supply.
Go ahead,
Technically
FFC.
locked supply.
Go ahead, Journal Journal F.
Yes,
FC.
sir.
Go ahead, bro.
I just wanted to ask a question about the level 2 conversation. Like, because like my perspective on Ethereum is kind of like, from like perspective of like NFTs. I'm not a huge NFT trader, but just like, I don't know. I guess as a person who's kind of a techie, I like Ethereum NFTs because the idea of like owning something makes sense to me on like a blockchain that is like very decentralized, and I'm sure that it's going to be around for a while. And then like a level like an L2 comes along, it just seems like kind of cheap. Fundamentally speaking, I guess if you buy an NFT on an L2, fundamentally speaking, I guess it is an Ethereum NFT. Eventually it is. Like eventually it goes back to Ethereum. Or like if I buy an NFT on Metis and somebody else buys an NFT on like whatever, Starkware or something, are they both buying Ethereum NFTs? And like they can both be like, yeah, we both own NFTs on the same world. Because I feel like that's a positive thing. Like you don't want all these like disparate, like disconnected worlds. You want it all to be like
I think
unified.
so. Yeah. Well, like I think Matic
exactly.
Because Matic, it's like it's on OpenSea and it's all denominated in Ethereum, like the price, like the floor price and everything. But you just pay gas fees in Matic, right? And then the Ethereum logo is like little purple or whatever, so it's like poly wrapped.
Yeah, I mean, the thing...
that's good, just in the sense of like it's cheaper to use than if you were just using Ethereum natively, and like there really is no difference, just besides the back end.
Yeah, right. So you have to remember though, Matic is not an L2, right? Matic POS is not an L2. So if you buy an NFT on Matic, you do not have an Ethereum NFT. Now, OpenSea operates on Matic, but OpenSea is centralized, right? It's not blockchain. It may as well be FTX. And NFTs have a bit of a centralization problem with OpenSea at the moment, but let's not get into that. But yeah, I mean, to answer Journal FFC's question, if you have an NFT contract that's on mainnet Ethereum, then I believe you can transfer ownership of those NFTs onto any of the L2s, and because they're all in the same kind of like world, so to speak, you can't have the same NFT from the same contract on 2 different Ethereum L2s. That's just not allowed. But you could have a copy of it on Polkadot or Solana or whatever, because that's a different world. It doesn't have to be unique. So yeah, I mean, I think basically that's the way it's going to go, right? Like people are going to realize that actually having an NFT on HBAR or Algo or Sol or something like that isn't as good as having one on Ethereum, because we have certainty that Ethereum's still going to be around, whereas HBAR might just completely rug. And as soon as one of these alt L1 blockchains like fully rugs and everything's just completely worthless and the chain stops, like that's going to really shake the confidence in the others because people will be like, oh shit, now that HBAR's rugged, maybe Algo and Cello and Rose and Sui and Asta, maybe these are going to rug as well. So maybe I should just go to Ethereum. And
Yeah.
oh, by the way, I can use an L2 so I don't have to pay expensive gas fees. Now,
Yeah.
that I think is going to be the game theory of the L1, the great
Yeah.
L1 culling.
That's something that happened the last cycle. You had things like Neo and Wan Chain and Aeon and Icon, and even Dragon Chain, right? Like all those things were preaching interoperability, and they branded themselves as layer one. And essentially, like in 2018, the culmination of the destruction of that entire trade was when the Wan Chain Foundation separated, and Dustin went on to try to build like a security tokens exchange. They called them STO, security token offerings, and he wanted to build an exchange. And then something fundamentally bearish happened at Neo, where there was like majority of the team went on to go build ontology, and it was a whole destruction, right? And then every other layer one ICO completely rugged, and things like Solana and AVAX and Terra pushed back their releases until like 2020, 2019. So, all right, guys, it's been about 2 hours. It's been a great conversation. We got to know Naka on a personal level. Naka, you identify as a Disney adult, right? That's like, I think that's
Well,
like the result that we can get from this
I,
from
I,
this
I, I,
conversation.
I don't know about that, but I certainly identify as regretting my early history with Ethereum, where Virgil Griffith tried to get me into it in 2015, and I said I couldn't because I was too poor and I had to go and work a day job instead. Worst decision of my life. I'm going to regret that forever, but it is what it is.
It is what it is, bro. I'm a Disney adult, and it's fine, but it is what it is. So guys, I want to thank you for coming on another episode of Crypto World Radio. I want to thank Naka for taking the time out of his day. I know it's getting pretty
Appreciate it.
late where he's at. Thank you, Naka, for coming on. Thank you, Payne. Thank you, Vestige, for always coming on and showing support. You guys are my boys. Thank you, Nick and Journal FFC, for coming up to ask your question and add statements to the conversation. And thank you so much to Joe Carlos there for coming up earlier, and also
Yeah,
V
appreciate it.
plus plus. I know there were some requests that came on a bit later in the show to come up to speak, but we did pass an extended amount beyond our usual time. I like to keep these spaces no more than 90 minutes, but given the great conversation held between Mr. Carlos Sayer and Naka, I gave it a shot. So yeah, if you guys want to catch a replay of the Crypto World Radio Spaces, feel free to go to our YouTube and check it out, and click that subscribe button so you can be notified anytime you miss these spaces and want to catch up on them. And I've also pinned up top yet again our Discord page if you want to engage in a vibrant community of all walks across all markets. Feel free to do so. And I understand that some of you, um, you know, kind of join the space late and maybe don't follow Because Bitcoin page. Feel free to do that as well. We do host multiple spaces a day. You have Carter with Market Talk, usually at 4 p.m., 4:15 p.m. Eastern time, and then myself, typically at 7 p.m. Eastern time, sometimes at 8, sometimes at 9, sometimes a bit earlier, depending on who I'm going to have on the show for the day. And yeah, thank you, thank you for everyone who showed up today. And
Always a pleasure.
take
Of course,
care.
brother.
Take care. If you guys have any last thoughts, feel free to say them before we rug the space.
Yeah, just appreciated, Wabi. Thanks for hosting. You've always been a good friend, and yeah, go check out Because Bitcoin. I actually might go join the Discord myself. I've been putting that off for a while, but
It's a great Discord.
it's a
Super
cool
active.
community. I'm very happy to be a part of it and to know these fine people. So yeah, check it out, guys.
Yeah, man. I still remember back in the day, dude. And I only say
Back in the day when Luna was like about to dump. Holy shit, dude!
Yeah.
You remember I made those Bane memes, like one of us is gonna
Yeah.
be left in the wreckage.
Yeah. Yeah, man. Yeah, and it's pretty wild, dude, because like I literally like 10 hours before the DPEG, I had made a tweet that said like, is this Lehman Brothers all over again? Because they had said that like they're gonna trade their LFG fund to defend the peg, and yeah, what happened happened. But what matters is that we're all alive.
Absolutely.
We survived. This bear market has been absolutely horrible compared to 2018, to be honest, and the amount of wreckage that has occurred. But yeah, guys, thanks for joining, and I hope this content has brought some value to your time and to your life. So thank you, everyone, once again. I'll see you on the next one tomorrow at the same time. Have a good night, everyone, and God bless you.
Take care, brother.
The trading current is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times, when I buy this, I'm going to get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, you say, I'm going to trust the statisticians. You would have bought Dow Jones somewhere down here under 30,000, depending on how you want to measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. You can ping your phone. Now, the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.